Welcome to the deep dive. Okay, so if you're watching the markets, things feel pretty anxious right now.
Hmm.
Gold's hitting record highs. The usual flight to safety with stocks wobbling and tariff concerns
Oh,
everywhere.
the classic playbook.
But we've spotted something interesting, maybe a bit surprising. Prime UK property seems to be making a comeback in that safe haven conversation.
Yeah, it's definitely back on the radar. Prime Central London, PCL. I mean, it used to be the place for global wealth to park itself.
But it lost some of that shine after, the mid-2010s?
It certainly did. So our deep dive today is really about figuring out why. Why is PCL property suddenly looking like a safe bet again?
And what's pulling those international buyers back in?
Exactly. What's the mix of factors?
And let's be upfront. This isn't just about, sellers in London cutting prices.
No, not entirely.
The real story, the key insight maybe, is this kind of perfect storm, right? You've got currency weakness hitting up against, complex international politics.
It's the external forces really dictating things now.
Yeah, telling you how desirable that London flat is. Okay, let's dig into that, starting with the value perception, the economics.
Makes sense. So first off, PCL average prices, they are down about 18% lower than their last peak, which was back in mid-2015.
Okay, 18%. That's noticeable on its own.
It is. But the real kicker, the aha moment, is the currency effect. Because the pound's been, relatively weak against the dollar.
Right.
So buyers using U.S. dollars or currencies pegged to it think the U.S., many Middle Eastern countries, they're seeing a much bigger discount.
So what's the actual number for a dollar buyer then? If they compare buying today to, say, that peak time?
We're talking a relative discount of around 37% compared to July 2014. That's huge.
37%. Wow.
Yeah, and our sources are saying that for these buyers, London feels like surprisingly good value.
You can see why, and you're seeing this in the numbers.
We are. U.S. buyers, for instance, made up almost 7%, like 6.9% of all PCL buyers in the first quarter of this year, 2025.
And that's high.
It's the third highest quarterly figure for U.S. buyers in a decade. So yes, the money is definitely moving.
Okay, so the discount gets them interested, opens the door.
Yeah.
But what's pushing them through it? There must be a sort of psychological driver, too.
Well, that brings us to the global connections bit. We're seeing reports suggesting some U.S. buyers are specifically looking for options outside the U.S.
You mean related to the political situation there, the Trump regime, as some sources put it?
That's what's being reported, yes. Some buyers apparently see London as a natural fit shared language, culture, a place for, flight capital.
Okay, and here's where it gets really interesting. The link between that political climate and actual costs here.
Exactly. It's kind of unexpected. U.S. trade policy, like announcing tariffs, seems to be impacting U.K. mortgage rates.
How does that work? Tariffs over there push rates down over here.
Basically, yes. When those tariffs were announced, it signaled potential global economic slowdown. Markets react to that.
Right.
And that puts downward pressure on UK interest rate expectations. We saw the 5-year SONIA swap rate, for example.
That's the key benchmark rate for mortgages, right?
Precisely. It fell from over 4% down to about 3.7% pretty quickly after some of those announcements.
So the market's betting the Bank of England will have to keep rates lower for longer because of potential trade wars slowing things down.
That's the interpretation. So the takeaway, kind of bizarrely, is Donald Trump's trade policies might have made buying a house in the UK slightly cheaper.
Huh. That's a headline. A global butterfly effect right there.
It really is.
But hang on. If the UK is only relatively stable, you look at the Eurozone, its structural issues, Germany slowing down,
Right.
isn't relatively stable,
Yeah.
still a bit, risky for a safe haven asset.
It is a risk, absolutely. But investing is always about relative risk, isn't it?
True.
You compare it to other options. Look at gold. Sure, it's up 40% in a year, but it doesn't generate income, and who knows if it's peaked.
Good point.
Whereas PCL property, with that 37% currency discount we talked about, it looks comparatively cheap, and you can get rental income. And there's data here, too. Research from HMRC, the UK tax authority, found 42% of overseas buyers specifically viewed UK property as a safe investment.
42%. That's quite a chunk seeing it that way.
It is.
That said, we should probably add a note of caution, right? There's no such thing as a guaranteed safe haven.
Absolutely crucial point. Things can change. Property, gold, whatever's hot, it can still fall.
And there's policy risk too, isn't there? Specific to the UK.
Definitely. That might be the biggest risk for these buyers. A future government could, bring in much higher taxes, specifically targeting overseas owners' higher stamp duty, new capital gains rules for non-doms.
Right, things that could suddenly make it much less attractive. That undercuts the whole safe haven idea.
Exactly. That regulatory risk is always there. Some experts argue the real safe haven isn't an asset class at all.
What then?
It's your financial plan, a solid long-term plan that accounts for volatility. That's maybe the safest place.
Build the bumps into the roadmap from the start. Good advice.
Yeah, check your long-term plan.
Okay, so wrapping this up, the key drivers pulling money into London property right now seem to be that big currency discount, maybe some political flight capital from the U.S., and these unexpectedly favorable mortgage rate predictions linked to U.S. trade moves.
That seems to cover the main points, yes. External factors are really steering the ship at the moment.
Which leads us to our final thought for you to chew on. If U.S. politics and trade policy are now visibly moving the needle on U.K. property values and borrowing costs, how much does international instability now outweigh domestic U.K. policy when you're trying to value these prime assets?
Yeah, what does that mean for where you put your money next when decisions made thousands of miles away can directly impact your investment?
Something to think about.